Good morning, everybody.
Good morning.
Good morning.
In Jeddah, we are happy to resume our 34th, I believe, seminar in the series since we started 2010. We are very proud in the chair that we are doing this series and continuously. Alhamdulillah ta'ala. Thank you for Pierre, for the management. Thank you for Paris, the university. Thank you for everyone make this a successful seminar, a series of seminars in fact. Today, Ahmed Bloofi, very well known. We don't need to introduce Ahmed Bloofi. He is, of course, a researcher in our institute, Islamic Economics Institute, for a long time, alhamdulillah ta'ala. Today he's going to speak about a new topic. It has been discussed in many circles around the world, especially after the crisis, where we have problem in the, or many questions, many main questions regarding money and the monetary system. So speaking today about sovereign monetary system. I will leave the details for him to start and finish, inshallah ta'ala. The time for you is 25 minutes? Okay, 30 minutes? 35 minutes? Okay, 35 minutes. Okay. And then we have the discussion for another 35, equal. Looking for equality. Right? Assalamu alaikum.
بسم الله الرحمن الرحيم والصلاة والسلام على أشرف المرسلين سيدنا محمد وعلى آله وصحبه ومن اتبع سنة واهتدى بهدي الدين. Assalamu alaikum everybody here in Jeddah and in Paris, and I am glad that I will be sharing with you this very, I think hot and sophisticated topic as well, and complex. So what I'm going to present today is only a snapshot. We need to have more discussions, technicalities, feasibility, and the way things are going. So may I ask you, do we have a sovereign monetary system? In Paris, please. Do you have in France a sovereign monetary system?
No.
Why? I think the answer is clear, because the euro is now issued by the European Central Bank, isn't it? No more by the Central Bank of France.
But we can also think that our country is Europe.
Is
Europe.
Europe. Okay.
Not France.
So okay, so that the Britons would say yes, we still have the British pound, we still have the Bank of England, so on and so on forth. Okay, on our side here in Jeddah, do we have a sovereign monetary system here in Saudi Arabia? Yes or no, please? I will come to the details. Yes or no?
No. Of course.
No.
Of course, yes. I think, how many say yes?
Let's take it to the door.
Okay, one. Yes.
No.
No. How many say no?
No.
Yes, okay. So I think now we are going to start and see if those who say yes, how, and those who say no, how, and probably inshallah we'll have a close, at least views towards the issues that we are going to discuss. And my outline, I will speak or say a few things about the address queries, objective and rational, the nature of money in modern economies. Is it, exactly as described in monetary and economic textbooks, or is it rather more than that? What is the origins of the sovereign monetary system? Is it a fresh idea? And implications and consequences, the building blocks, the way forward. Okay, as we said, the rationale, do we need a financial reform? I think the crisis and the recurrence of crisis do tell us that, yes, we need. But what is the starting point? That's another issue. Who owns the authority to create money? And who should have it? It is very and vital, important question. Is there a relationship between the money creation and some other and some of the deeply rooted disorders like debt and inequality that world economies suffer from. If we do have a positive and strong relationship between the two, then I think there is a strong case for the call for a sovereign monetary system. What is a sovereign monetary system, and what does it stand for? And as I said, is it a fresh idea, or does it have its roots, in history? Is the SMS, not the SMS that you receive in your mobiles, okay? So please, SMS, sovereign monetary system, agenda plausible and feasible? My objectives, I hope, is to unveil the nature of and impact of money in modern economy as practiced, not as taught. Share, of course, and exchange ideas. Probably I misunderstood the call or anything, or that you have some objections. That's really, I welcome to clarify the issues. Explore the reality of the SMS reforming agenda and some of its features, merits, and critics. Highlight other issues transcending and or complementing the SMS reforming agenda to my understanding from the principles of the Islamic economics and finance perspective. I think the issue should go deeper than or more than what has been proposed by the SMS reforming agenda. Yes, to my view, it is an welcoming step, and we need to understand how our financial systems work and where are the major fatalities and major imperfections in order to rectify them or replace them. So do we need a financial reform? As I said, yes, and I presume that you have read, so I will go very quickly. Recurrences of crises, according to the database collection of the IMF, more than 147 crises over the past few decades. Regulatory measures that has been addressed, by many regulators and central banks all over the world after the recurrence of the recent global financial crisis in 2007-2008. So regulation, was given a prime priority in order to rectify the things that are not working well in the financial system. But this, I think, approach is costly, and it has not fixed the problems or deep-rooted problems. If you see that, for instance, when Basel I was, prepared, only 30 pages. And then now we are in Basel III, 509 pages. And of course, when we are talking about the pages, the experts, the effort, how many years, and so on and so forth, by the Basel Committee and other, so Basel IV, for how many pages it will be, how long it will take, okay? So it's very, very important. Monetary policy tested to its limits. So the conventional monetary system policies did not work. So that's why we needed unconventional measures to be adopted. Free fall of the great moderation. Any one of you have heard about this notion? Great moderation? GM, not General Motors, okay? GM, Paris, great moderation?
Yeah, it's okay.
It's okay, okay. A huge social cost, of course, bailouts, foreclosures, and is there or are there any fundamental issues that have been addressed yet by policymakers? I will see that. So you will see. You are all familiar with this. Figures. So I will just go very quickly. Just if we compare when the Marshall Plan was produced after the Second World War, and how much money was devoted to that. And we see only one crisis, that's the financial crisis. We'll find that this financial crisis costs 74 times that plan. The plan was intended to rescue the whole Europe, and this I'm a commitment only to rescue the US financial system from collapsing. And foreclosures, and this is really and ethical and moral issues behind, and also economic issues and consequences. And that's why one of the economists raised questions about the interest-bearing instruments and how it has been used by banks in order to evacuate those who are in arrears or unable to repay the amount that they have borrowed to buy properties. And we've seen that the famous economist, the American Joe Stiglitz and others, they said that we should not let banks evacuate and foreclose the houses of the people who were unable to repay their amounts, because this, as we said, it has moral, social, and economic consequences as well. And huge cost stimulus packages and historical cuts of base rates, and this is one of the unconventional monetary policies that has been adopted in order to contain the consequences of the Great Recession in order to avoid the world moving to Great Recession. And world economies hit very badly. As I said, all you know that how the world has been contracted and the economic growth has declined in major economies and in major advanced economies and emerging economies as well, and of course developed. So unconventional measures, as I said, zero rate interest rate policy or close to zero rate, zero bound, quantitative and credit easing. Quantitative easing was introduced by the Central Bank of Japan during the period 2001-2006, and credit easing was a policy advocated by the chair of the ex-chair now, Ben Bernanke, in 2009 in order to contain the consequences of the Great Recession or the global financial crisis. And there is a technical difference between the two. The credit easing, has used three instruments to inject directly the credit to the banks, lending them, or to the markets, or the repurchase of the long-term assets like the bonds and treasury bills, whereas quantitative easing has concentrated only on the repurchase of the government securities. Public entities for waste or public or toxic assets, and you know one of the initiatives took place in America. In all, economic woes of the crisis are not over yet, as has been recorded by a recent publication by the ex-chairman of the FSA, Financial Services Authority, and printed by the Princeton University Press, just I think last month. And can you please hand me that? Between Death and the Devil, the book, yes, by Lord Adair Turner, as I said, the ex-chairman of the FSA, of the Financial Services Authority in the UK. So he recorded that millions of people, as we said, lost their homes. The Spanish, for instance, unemployment grew from 8% in 2007 to 26%, and it has only declined from 2003 till now to 24%. The public debt, increased. Even national income and standard of living in many countries are 20% or more below where they could have been, and now fiscal austerity programs have been introduced in response, like in Greece and some others. So who has caused the trouble? They are not, those who are paying for it, but the layman, the ordinary people from the taxpayers' money. So this really needs deep thinking and needs a discussion, an open and honest discussion. The underreported daunting facts of our societies, if we take just the example of the British society, you will find that people in the UK owed 1.447 trillion at the end of August. And you will see that some other facts. And according to the Office for the Budget Responsibility, July 2000 forecast, household debt in the UK is predicted to reach 2.55. That's almost, it will double from now till 2021. So this makes the average household debt of 95,532 pounds. So where are we going? Do we have, clear-cut measures in order to put such a trend, such an end to such trends? And what will be the consequences for that? So the Great Moderation is the name or the term given to the period of decreased macroeconomic volatility experienced in the United States since the 80s and other advanced economies apart from Japan. As you said, or as you all know, that what is called the lost decade has really entered the economy of Japan into very difficult and turbulent situation. During this period, the standard deviation of quarterly real GDP declined by half. So the then US Federal Chairman Ben Bernanke, called this by some other economists the Great Moderation. And you can see that Robert Lucas, who is a Nobel laureate, concluded in 2003 that the central problem of depression prevention has been solved for all practical purposes and has in fact been solved for many decades. And why did we have such a great GM, as I said, not General Motors, but Great Moderation? Ben Bernanke, in a speech delivered in 2004, he extracted three hypotheses. Why we did or major economies in the world experienced in the past 20 years prior to 2007, the Great Moderation. It could have been structural changes to the economies due to the advances in technology and so on, improved macro policies, or good luck. In discussing that, he concentrated on the second, that improved, and in fact his words states, if the Great Moderation was largely the result of good luck rather than a more stable economy or better policies, then we have no particular reason to expect the relatively benign economic environment of the past 20 years to continue. Indeed, if the good luck hypothesis is true, it is entirely possible that the volatility, the variability of output growth and inflation in the United States may at some point return to the levels of the 70s. If instead, this is still the words of Ben Bernanke, instead the Great Moderation was the result of the structural change or improvement policy making, then the increase in stability should be more likely to persist, assuming, of course, that policymakers do not forget the lessons of history. Did we learn, or did they learn? I think the subprime crisis took the GM by surprise to let the world enter into the abyss of the Great Recession, resulting a free fall of the Great Moderation. Are there any fundamental issues that goes beyond the regulation and some other issues that have been adopted by the policymakers? I think yes. Of all, and I've quoted some of these, for instance, Lord Mervyn King is telling us that of all the many ways of organizing banking, the worst is the one we have today. And another economist from the London School of Economics telling us that we do not want communism, but we do need a more humane brand. That's the role of ethics and morals in economics and finance need to be given a due consideration. And also Lord Turner is telling us that yes, they have done a good job, but they have still failed, he and with other, financial regulators all over the world, but they still fail to address the fundamental issue, the ability of banks to create credit, money, and purchasing power, and the instability which inevitably follows. And also, finally, Klikov and Lerner is telling us that we do not need the baiting of the Wall Street. So this, will take us to discuss the issue of how money is created in a modern economy. We do have two postulations. The widespread, that we do have a money supply. The government, here like in Saudi Arabia, Sama, will create an amount of riyals, that is the physical cash of riyal, and will determine how much reserve will be requested from the banks, and then will inject the money, and the banking, once the money is deposited with them, will multiply the base money. The endogenous, and this is called the exogenous money theory, okay? So money, as we said, banks' role is only to multiply existing money. The endogenous or modern theory of money creation is telling us, no, that's not the way, or it does not reflect. The exogenous theory does not reflect or does not give us the full picture of how banks work and how money is created in a modern economy. So let's go. So the money multiplier, and this is all known in any textbook in economics or finance, that the central bank, as we said, sets the reserve ratio, creates money base, and injects the money into the economy. Once in the economy, this money circulates before being deposited with banks. Banks then lend the fraction of the money, and you all know the sequence of this. So the most important elements in determining how much money can banks create according to this is related, or is inversely related to the reserve ratio. The higher the reserve ratio required by the central bank, the lower the ability of banks to create more money. And that's why some of the economists, they have asked for 100% reserve in order to ban or to limit the ability of banks from creating money. So the process continues until the amounts relent are minuscule. The quantity of money in circulation is now a multiple of the base money, with the multiple determined by, as we said, the reserve ratio. Of course, there are some other issues. This will only simplifying the case, because there is the leakage issue if the people, they do not redeposit what they have lent from banks, and the ability of more money coming to the banks through depositors and so on and so forth. The endogenous theory of money is telling us that the banks, they do not wait for your deposits. They do not wait for your money. Instead, they create money through the lending process. Okay, banks lend, creating deposits in the process. This increases demand for reserves in order to settle for the payments. Of course, the central bank provides the reserves of course, the stability is very, very important in order to avoid any bank run. To banks on demand, thus accommodating the bank's sector's lending decisions. And in this process, we'll see later in a slide that the bank's abilities to create more money, is more than according to the credit multiplier. So this will give you at least give you a difference between the two theories and how the process starts. On the left side of the slide, you will find that is the exogenous theory, the money multiplier that is widely, taught at universities and other places. So the people will come into the bank or the other economic agents, deposit their money, the central bank sets the reserve, then loan is D minus R. On the right side, as we said, the bank will loan, not existing money, but it will go through, as we like digital now, and only it is like an accounting, and we are proud. I mean, now we have Dr. Yusuf. He is an accounting, so he can explain to us how the the accounting process will work on this system. So the bank will lend money, and this will create a deposit, and deposit is almost equal to a loan, and the reserve will be determined and arranged by the bank. And you know, central banks, they do have different means, open market operations, repos, and recently they do have quantitative easing, and also banks, they do have interbank and money market to accommodate for reserve, especially if the deposits are not only with a single bank, but they go between banks. So the Bank of England is telling us that this is the process. This is the actual fact, at least in advanced economies. In a recent document entitled Money Creation in the Modern Economy, the Bank of England is telling us in the modern economy, most money takes the form of bank deposits. But how those bank deposits are created is often misunderstood. The principal way is through commercial banks making loans. Whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's account, thereby creating a new money. This reality differs significantly from the description found in some economics textbooks. Rather than the banks receiving deposits when households save and then lending them out, bank lending creates deposits. In normal times, the Bank of England says, the central bank does not fix the amount of money in circulation, nor is the central bank money multiplied up into more loans and deposits. That it means, under normal circumstances, if the economy is booming and the economy is okay, the tune is fine, then the central bank will let, at least as we said, in advanced economies like one in the UK, let banks to create more money, and the recipients are there, economic agents are there to take those loans. And do monetary and economic textbooks capture this reality? Turner, in his latest book, is telling us no. And read, as he said, almost any economic or finance textbook, and it will describe how banks take money from the savers and lend it to business borrowers, allocating money among alternative capital investments, but as a description of what banks do in modern economies, this is dangerously fictitious for two reasons. First, as he is telling us, or as you said, Lord Turner was the ex-chairman of the FSA, Financial Services Authority in the UK, between 2008 and 2013. Banks do not intermediate already existing money, but create credit money and purchasing power which did not previously exist. And second, where? So the money creation is very important to issues, and how to allocate those money. Do those money go, or that the created money, go to reinvestment, to capital, to things that create jobs, or do they go to other financial things that they are not beneficial to economic? Okay, thank you. So he says that second, because vast majority of the bank lending in advanced economies does not support new business investment, but instead funds either increased consumption or the purchase. I think also this is a reality to some extent in other economies like here in Saudi Arabia, in particular real assets also. So as a result, and less tightly constrained by public policy, banks make economies unstable. So the money supply in majority of our economies, it goes like this. So money is created, the instant it is lent or borrowed. The interest is charged on that. How to repay not only the principal but the money, so we need to borrow. So money is created and the circle goes on. That's why the result majority of money created privately. So if we see on the left that the extreme case is the case of the UK, where 97% of the money supply is created by banks, not by the Bank of England. On USA, 15% is created by the Feds, that is physical money, and the M4 or M3, 85% is created by the private, by commercial banks and some other institutions. And also in Saudi Arabia, similar to the US case. In Nigeria, it's almost, so we can say at least that 60% in all economies is created privately, not by the state. So do we have a sovereign monetary system? I will see. So the exogenous theory, as we said before, versus the endogenous theory. So I think this, it gives us at least the impression that on the endogenous theory, as it is practiced in most advanced economies, banks do have more ability to create money, but this does not, they will create it freely. Of course, they will see there are constraints, and the central bank will step in if things are anticipated to go beyond control. So what are the consequences? Instability, boom and bust, injustice, increase in debt levels, increase in inequality, not so inclusive system. Stability is destabilizing. As we said, under the normal circumstances, if the economy is booming, so everyone is requesting how to benefit from such a situation. This will give the incentive that the people and the economic agents to work on the hope that the economy will keep, growing on that. So they will take more loans, but this will come to, as Hyman Minsky, financial instability hypothesis. So it has some credentials in order to describe the endogenous fragility of the financial systems that work all over the world. Money is a common and social good. It has to belong and work for the society as a whole, not only for it should be left only to a fraction of the society, bankers or whomsoever, who create money and benefit from that. So increase the level of debt, as we said, the incentive of benefiting from money creation drives creators to issue more money in normal times. This will increase the levels of private and public debt. So that may explain the question that I has put, or Robotham in his book 1998, if all of us, we are indebted, to whom we are indebted to, who owes whom, and so on and so forth. Increase inequality, and there is literature that provide empirical evidence relating the money creation and some other financial practices to increase inequality, and the wealth is transferring from the large community to the hands of the few. And finally, and all of us, we know that the unbanked population, about 2 billion of the whole world population, they do not have access to financing. That's why you do have some microfinancing, recently alternative financing growing phenomenon. And is the SMS a fresh idea? So the pages provided in front of you, it tells us that at least from the beginning of the 18th century, there was a concern about the issue who should create money and who creates money and who should have that authority. So you will see, as we said before, that many economists and social activists, they have come, and even politicians, to say that we should not let banks create money, and we should retain it and give it to state exclusively, as Abraham Lincoln in 1865, US president, in his monetary policy, he calls for government sole and exclusive monopoly for the creation and supply of money to the economy. And some other economists, as we said. So I have documented those until now. Or recently, a commission report was prepared to the Prime Minister of Iceland, embracing the ideas of the sovereign monetary system. So the sovereign monetary system idea is not afresh. The only thing is that taking into consideration the technological effects and their impact of how money is created, are they digital or physical, and so on and so forth. So what are the building blocks of the SMS? The most important thing is state exclusive monopoly of money in whatsoever physical, electronic, or other forms. So this is the main idea of the SMS sovereign monetary system, that we should not let any private entity, individual or institution, to create money or to issue money in whatsoever form. And after that, of course, we will come to how to create money and how to control it, how much money is needed to sustain economic growth, and so on and so forth. And that's the other element or the block is separating the powers of creating money from allocating. So now the banks, they do create money through the loans, and they allocate it to different economic activities. And these economic activities are not benefiting the economy, but they are benefiting entirely the creators of money. And there are more details. So the features, as we said, is to separate the payment as advocated by David Ricardo in 1823, 6 months before his creation. He asked for the creation of or the establishment of a national bank, because the Bank of England at that time was a private entity, and he requested that the ability of the Bank of England to issue money to be taken from it, and the bank will only intermediate and lend existing money. So there are many issues here. Clear distinction between truly risk-free money in the bank account and risk-bearing investment that could lose value. And this is clear in the sovereign monetary system proposal as advocated by the positive money movement, or the Institute of National New Foundation that was created in the late 90s, and some other people and policymakers like as we said, Turner and Mervyn King and some others are making this call clear, and that we should separate between the ability to create money and how to allocate money, and to let the money, as we said, as a social and common good to work for the society, and those who benefit from it, the entire society, not a fraction of it. And as we said, risk alignment on all investment accounts, no pain, no gain, gaining the upside normal. And finally, that banks that fail will be liquidated. No more room for too big to fail, no deposit insurance either. And anticipated merits, there are various studies. I've just quoted a study by the two economists of the IMF in 2012, and they said that they have revisited the Chicago plan, and they found that using DSGE model to the US economy, and they found the results of their study supports all, advantages of the Chicago plan, as supported by Irving Fisher in his book 100% Reserve, elimination of business cycle, complete elimination of bank runs, dramatic, of course, change of public, and we said, and private. Furthermore, they found that output gains approach to 10%, and already inflation, state inflation can drop to zero without passing. And of course, as we said, these are a few things. And of course, this, because it is a human design, and it is a human proposal, it is not safe from critics. So there are some of them, they say it won't work, some they say it is unnecessary, and even if it works, it will be damaging. And of course, vice versa, the situation where we are now, it's really also damaging, and it is not working as we, or economists, as we policymakers want it to be. So we need, I think, to weigh the cons and the advantages and disadvantages of each system, and we need to have, as we said, open and honest discussion in order to come to a concrete, and clear-cut, the understanding of this proposal and other reforms, because the reforms that have been adopted by policymakers did not work. More regulation is not going to work, and more, bailouts, more, injection of public funds will, create more debts, more public debt to our economies, and will hang over the economic growth and will stagnate our economies in the future. That it means creating more crises, and that's why we did have, after the global financial crisis, the Eurozone sovereign debt and some other problems here and there. So finally, as I said, the central message of the SMS proposal would underline whether the reforms are called the Chicago Plan, limited purpose banking, narrow banking, or the sovereign monetary system, the message is unified. The world needs a financial system that makes a dramatic shift in its paradigm and practices toward the issue of money creation, as money creation is too important to be left to bankers. Yet, there are other deeper issues not being addressed by the SMS reform. A shift is also needed to depart from the heavy reliance of the financial system on risk shifting, that is interest-based debt contracts and debt financing, to provide a level playing field for risk sharing and equity finance. As one economist from the LSE put it, if too much debt and too little capital are part of the problem, then the conversion of debt into equity is part of the solution. And other says Western policymakers and economists often portray Islamic financial systems with their emphasis on risk, on shared risk and responsibility in lending, as less efficient than Western system that put no restrictions on debt. Yet one can equally argue that Western financial intermediation is far too skewed towards debt, and as a consequence generates more unnecessary risks. That those policymakers ought to be looking at the systems for positive ideas that might be adopted. This Kenneth Rogoff, Prof of Economics and Public Policy at the Harvard University. And of course there is the other issue, to my understanding, tax, regulatory and other biases in favor of debt instruments over equity have distorted the functioning of the system and need due consideration and fixation, according to IMF study 2011 and EU Commission study as well in 2012. So there are more issues than only the issue of money creation as provoked by the sovereign monetary system. And that's, I think, will make me end my presentation, and I hope towards this presentation that we do have some common ground on that there are pressing issues in financial and monetary systems that need fixation, need discussion between economists and policymakers in order to make it better for the whole society, not for the few. And I have provided few references, and you can add some others as well. And finally, thank you for your care and attention. Assalamu alaikum.
What a perspective.
Thank you, Ahmed, for the interesting and presentation. The topic, of course, is very important nowadays. It is about the system, changing the system, the monetary system. And I understand that the main message is that this paper is calling for more towards sovereign, the money to be within the hands of the government of the sovereign state, not to be given to the people, or let's say monopolized by some people within the country or the system. As usual, with respect to question and answers and comments, we will start from Paris this time, listening for the comments and question and answer, and then come back to Jeddah. We will have also another maybe 35 minutes for this period. Thank you. Please, Pierre. Lord, you.
Gentlemen, so Abdelkader already has a question, so please, Kader.
Assalamu alaikum. Thank you very much for your presentation, Ahmed. My question is simple. Why you didn't refer to any literature coming from Islamic finance? Because we have some authors that have written some references and proposals about sovereign monetary system within the Islamic finance perspectives. Thank you very much.
Thank you. So we will collect, I think, we'll collect questions, and then Dr. Ahmed will respond
Yes.
at the end,
Okay.
please.
Gentlemen, we do have some new faces today, so maybe some new questions too.
Yeah.
Okay, Ahmed, thank you for your presentation, which is a very nice introduction to very contemporary literature and issues about what money is really. And you know that this is not only a matter of economics, but it's, I mean, for us European, it's the heart of the contemporary political debate, which is basically what is Europe now? Is it just money, or money plus debt, or nothing at all? In fact, you know that I'm interested in economic history, and I'm a bit frustrated when you begin only in 1705 with John Law, who is well known in France, of course, because he has played an important role in developing the first endogenous money, setting up a bank which in fact issued some bills. But in fact, what is not known is that before Law, the French monarchy already issued paper bills, because there was not enough gold to fund the war, and you know that our Sun King was the king of war, so he was waging war all over Europe, and in order to pay for war, he had to have some money. And in fact, gold was not sufficient, so the monarchy issued many notes, and in fact, John Law only stepped in after the death of the king to do something with the enormous amount of paper bills which have been issued, and the French authorities did not know how to cope with all this. So at some point, I'm a bit frustrated with the idea that sovereign monetary system is a new idea. I think it has been the very dream of our Sun King. I'm sorry, the question is a bit long, but my question is such: to which point is this sovereign monetary system really sovereign? Because the state, of course, can wish to control the money issuance, but as you have said, there is a first constraint which is somewhat shadowy, which is the development of a shadow banking system, and there's another constraint which is the international value of the sovereign money. You know that there are more recent examples than the 17th century France, such as the Soviet Union, for instance, at the time of the ruble. They had a sovereign monetary system, but in fact, there's another joke, which is, you know the difference between a dollar and a ruble, and the difference was $1. Hence, the money, although it was sovereign, had no value outside of the sovereign state. So, in the end, the question which is raised by the sovereign monetary system is, how do countries coordinate to be so that every country is sovereign without anyone being sovereign about the others? And I think one bias of the current system is simply that the dollar was a bit more sovereign than other monies, which is translated by other monies being pegged to the dollar. So what do we do with how do we handle the relationship between political sovereignty and monetary sovereignty?
Vous pouvez aussi poser des questions en français si vous voulez.
I've been too long, so the floor has no more question at the moment.
Okay, okay. So we'll listen from Jeddah now. Okay, so listen from Jeddah, please.
Bismillahirrahmanirrahim. I have two comments and one question. The first one is about, we have to push on this sovereign system because we cannot apply our Islamic economic finance unless we have that system. Because as we know, that we are pushing for reduce the lending-based Islamic finance. So when we have a system dominated by lending or loan as a money, we cannot have Islamic financial system. So if we have that sovereign monetary system, we can apply all our principles on Islamic finance, and also we can achieve our objective as maqasid al-sharia for equity and fair distribution of the outcome of any economic process. This is the one. The second point here is that all this, when we are talking about this monetary system and financial institution, we do not mention the other very powerful instrument used on generating profit or money on this, which is gambling or speculation. And this is one of the present financial or monetary system. We have to see its effect on the instability of the economy, and it should be part of that presentation. This is the two comments. My question is why, since the sovereign monetary system is introduced or written about it since 1705, why the system allows the bank to control the creation of money? Is there any, say, political power or economic power which push for this direction and dominate the economy by this financial institution? Thank you.
Please introduce your name.
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Muhammad Masum Billah. I am affiliated with the Islamic Economic Institute. Thank you very much, Dr. Ahmed, for your...
You are member, not affiliate.
Yes. Okay. And for your good lecture. And it's very informative. So, I have a first question actually. do we have SMS in today's world? Though the idea has been began in 1705, but do we have in reality? From my personal observation, we do not have in practicality as we expect. We have theoretical, conceptual, yes. Now the question here, in your paper, I observed that there is not much practical modeling. You know, it's mainly is the factual ideas and factual, this contribution on this paper. So now it would be better if we do not have SMS in practice, in reality, what I mean actually, but how it could be. Now, and is it necessary? It is important. Yes, it is important. Now, your paper is expected to be with a practical model, not too much of descriptive, that we have a lot of literatures and concept. We do not need much. We need the practicality. Because it is important, we have submitted already the idea, it is important for both conventional and Islamic, and how it could be. Okay? Now, my suggestion...
The next paper, inshallah.
Inshallah. Now, my suggestion here, the SMS should be an integrated package or the model. It should be associated with or integrated with the political spirit and also global consideration, and this is for the modern SMS. Now, for the Sharia consideration or the Islamic model, it should also be with the Sharia compliance. So this is just my suggestion, however, and it could be called as SPZ. Okay, now, my comments, I finish in 2 minutes time, inshallah, that just in respect of the paper, that the paper is mostly on factual and descriptive. So, and also there is not much investigation. It's just that borrowing the idea of the collection of ideas, but we do not have much investigation here in this particular paper. Now, and also the comparison. I realize Dr. Ahmed, though it is a good lecture and good paper, but he did not consider Asia-Pacific practicality or the scenario much. And also the African scenario also has not been included here much. In the Middle East, only Saudi Arabia, but also we have many other countries have not been included here, the scenario. We have diversified scenario or the comparison, but has not been included here in this paper. Now, next issue here, though we are talking about the SMS, but we have a lot of discussion under the modern, practically modern theories, but we do not have any Sharia, the Sharia model. So now, Dr. Ahmed, it could be better if he can touch a bit, whatever possible way, the Sharia alternative. Whatever we have the more modern, but what is Sharia alternative then? Now, he mentioned here in his paper that zero interest free. The zero interest free, that is the fact, but that is somebody has claimed that it should be zero interest free. But now, what is the alternative then? It has not been explained here. Now, my suggestion that this particular paper is a very timely and very needed paper, a needed idea, but it could be better if Dr. Ahmed could analyze the paper based on the meta approach, which means that the comparison between the zone or the Asia, the Africa, America, Europe, and so on, Middle East. So compare. After comparing, then come up with the macro model. Macro model that could be globally acceptable, and it could be in two ways. One is the conventional model, another one is the Sharia model separately, or it could be a model, a single model, complying the Sharia sensitivity or ethical approach. Okay. Now, another thing is that in this particular paper, if Dr. Ahmed could come up with a Sharia alternative model, in this paper, so that a justifiable model, so that this could be a handbook or the idea for others to explore or to expand their research, and then the modeling and so on. Okay. Now, my question here: is there any way that we can establish the SMS backed by Go? So this is just my concern. If yes, we have to also we have not considered here or consulted many literatures from the Islamic scholars, and also we have quite a number of policies issued by Bank Negara in Malaysia and some other places have not been consulted. Okay, and also we have I just mentioned the person name, but I do not want to touch on the political or whatever sensitivity, I do not know, but from the intellectual or from the academic point of view, I just mentioned, Sheikh Imran has given a lot of lectures on this particular issue. It could be browsed through YouTube actually on this particular pros and cons. It could be a reference. Now, Dr. Ahmed mentioned that, quoted one of the scholars the idea that creation of money shall not be privately but centrally. Now my question here that Dr. Ahmed, if he could examine how it could be, could propose something, but it has not been in the paper yet. Okay. Now another thing is the risk-free.
Oh, finish.
Yes. So just I'm finishing. So risk-free, as mentioned, the risk-free, but risk-free how it could be. Okay, it has not been mentioned. So I hope that the paper, if can incorporate and consider those are the aspects, and they come up with a single model, alternative model, justifiable with the practical reality. That could be better. Thank you very much. Assalamu alaikum.
Thanks, Dr. Ahmed, for the very informative presentation. I have a single question: is how do you expect the impact of SMS on financial market dynamics and on other aspects like innovation, value creation, and so on? Thanks.
Moving towards sovereign monetary system, it's obviously not just monetary creation, it has a lot of other aspects, which includes the accounting issues and other, just like, when we are borrowing, the accounting system, they have a problem that they take the interest first and they leave the principals to the end. Rather, I think it should have been the reverse. But all these, reform or reformation is needed. My objection is towards your slide number 31.7.
Okay.
Banks that fail will be liquidated, no room for too big to fail, no, when you talk of no depository insurance either, that means the depositors will be the losers. Right? Instead of what I would recommend here, it has to be liquidated, but it has to be compensated by, because most of the banks are corporations, so the shareholders should be penalized for it. Thank you.
Thank you, Dr. Ahmed Bloowafi, for this informative paper. In textbooks, we have been reading that banks creates money from nothing, not from thin air, but when they receive, then they create money. Or if your idea is that bank can create money without receiving cash, So what will be the mechanism of control? Is there no mechanism, or it will be any unlimited or infinite power to create money? So how it could be controlled? It is just theoretical thing, or really available, or partly it is there is endogenous money and partly it is exogenous money which are working in our economy. In old system or in endogenous system, we know that the cash reserve ratio is fixed and bank has to follow it, and it is fixed to for two purposes. One is to control the lending power of or money creation power of the bank. The other is that enable them to meet the demand of the customers. And so now if bank can create money first or lend money first and then open account, equal deposit they make it. So what will be any limit for this power, money creation? It means the competition will allow them to create money infinitely, and if system is really existing, it should finish just like flood the economy like water which take them away. Thank you very much.
Well, thank you everyone from Jeddah, and I don't know if Pierre, do you have more comments or questions from Paris? Your side, please.
Did the 30 questions open your mind so you also have other questions to ask? Please, Yegri.
La question que je me pose, c'est est-ce que finalement la finance islamique a encore un sens dans un monde où la création monétaire est issue du privé?
Il y a eu une réponse partielle. So in fact, Jibril is asking the same question as one of you already asked, which is there any point trying to set up Islamic finance in a world when the private sector is issuing money or is creating money endogenously? But I think this is close to a comment that has already been made.
Okay, then I think we will end up by giving Dr. Ahmed, the speaker, Ahmed Bloofi, to give him another 5 to 10 minutes to conclude, to respond, and comments on the question from the two sides. Fadal, Dr.
First of all, I would like to thank you for your questions, queries, reservations, whatsoever. I think the main purpose is to discuss the issue. We are not here to dictate the one way or the other. We are researchers, and alhamdulillah, we are in academic institutions, so that's really very, very important. With regard to the Islamic system, I already mentioned in slide 29 the two-tier windows mudaraba by Asghari and Abbas Melakhor and the rest, risk sharing in finance, the Islamic alternative. So I came to that, but I purposely did not intend to go into much detail because the sovereignty of money is from the outset un-Islamic, I think, to my understanding. If we go deeply, or if we consult the old literature in fiqh, we will find that it is the role of the state, or what they call the imam, to issue exclusively the money. And also another paper that it can come out of this is to look into the history or of Muslim societies to see if we do have, prior to the the establishment of the modern banking, did we have, in any part of the Muslim world in the previous where money has been created privately? So this is my hypothesis that we will not find. This is a hypothesis that needs to be, supported by historical facts. When it comes to the points raised by our friend Pierre, yes, I'm really glad, and I mentioned in the paper that according to the sources that I've been able to consult. So I'm not saying that the call for the sovereign military is started only from that date, but the literature that I've been able to consult told me that. So I'm glad for the addition that the French monarch, they started that, and in England in 1844 the Peel Act. So so this will let me clarify that it has been practiced in some parts of the world where the issue of money has been taken from banks and reinstated to central bank. And of course, if we look into that history, we'll find that political and economic forces are really, behind such issues. And this will give me also another incentive. That's why in the Islamic world, or Muslim societies, if we did not have such a struggle, why we are living by that system? Why we should not go back and consult that history and learn some other issues. And of course, as Pierre stated, that there is of course, one of the reservations or the critics of that, the SMS, the sovereign monetary system, that if we do not let banks, probably shadow banks will come and step in. There is an answer for that, and as he said, so there is a whole package in the system. In order, first of all, we do need to have an independent and transparent committee that will work for this. Because if we, for instance, in the West, because you do have a democratic, parties, they might manipulate. So one party might manipulate the monetary policy, the creation of money, the interest rate, and so on and so forth, in order to gain political advantage over its adversaries. So there are many things, and as I said, the situation is so complicated. It has political, it has economic, it has many, but at least if we come to a common ground, some have said that the situation is resolved and all economists agree. I don't think. Even from the Sharia point of view, not all Muslim economists agree with the sovereign monetary system. There are those who still call for the fractional reserve and who call for still the same system to be applied. And of course, when it comes to the practicality, as he said, it is not that easy. Yes, I can propose a model, and there is already by positive money movement. I did not go into that, but as I said before, I put a simple question. Do we have a sovereign monetary system? Is it an issue or not? If it is not an issue, and the system that we are fine with, why we should go? Okay, we should just rectify it and so on. But I think if we look into the consequences and the implications of what's happening in the world, and this will come to if we my colleague Dr. Islahi, when he raised the question about how money is created. So this is how it has been described, and it does. The textbooks, express the reality. So we should question also what's going on because many things, for instance, over the past before the crisis, we were told that derivatives markets are efficient. This is a text, and all of us, we have studied market efficient hypothesis. But when the crisis came, oh, come on, that's wrong. So we cannot. So that's why Paul Volcker and other Turner, after the crisis, they said we need a single economist to provide us with, concrete evidence that there was a positive correlation, a positive relation between the explosion of financial derivatives and the economic growth, and that it has benefited the whole community, not only the few. So we need also to question what's going on in theory. That's why the theory itself needs to be revisited. And so my purpose is not only practical, the theory and what's taught in economics and in our textbooks to students does not reflect the reality. So do we play in a moral side or immoral side, we as economists, in just, making blind that because the world is going into that and so on and so forth. But also the international dimension. I'm glad that about the dollar, yes, I do agree that also an open debate about the international reserve currency, and this, of course, will take us to the Bretton Woods system and how it has been created, and the proposal of White versus that of Keynes. Do we need an international reserve currency other than the dollar? So there are, deeper and more, really issues that goes beyond only economics, but it goes to the. But at least, if we let our people aware of what's going on, and if we do, that's why I said towards the paper that now in some other places there are complementary and currencies that the people are trying to establish in order to minimize the costs of the existing system. Our colleague here, the Dr. Saati, about gambling and speculation, yes, it is also an issue, and I mentioned that towards the end that there are deeper issues that needs to go beyond what is the SMS. But of course, as a researcher, you have to be very specific in addressing only one issue. That it does not mean the other issues are not important and not relevant. My colleague, Dr. Masoom Billah, he raised so many points, but the focus is that how to provide a practical model. Yes, I agree, and time does not allow me, and there are many literature also with regard to the how to make a practical things for this, and the latest is a report by that was prepared to the Prime Minister of Iceland, and that it has been discussed in details by one of the Muslim economists, by Asad Zaman. He is very active in this area, the only Muslim economist I've seen that he is following. And also, of course, I do not deny that in Malaysia there is the call for the gold. My reservation that it is possible, is it practical, not practical? So also I do have some reservations, but as I said, I'm open to discussions. I'm open to things to learn from such a very sophisticated issues. But at least if we say that we are in a bad situation or worse, if we just lessen the consequences of the money creation of the other problems, I think that we are a step forward. Transforming the financial system, even according to, for instance, the positive money movement and others, it will take, for instance, in an economy like UK, at least 20 to 30 years. See? So it is a very deep issue, but I think the starting point is raising awareness. Even the public in Western economies, they do not understand, even educated and some other. So raising point is the main objective of my presentation. Time does not allow me to go into details, but also it is a challenging issue, as we said, and who will practice that. And with regard also the Islamic proposal, as you said, for instance, Asad Zaman came across his research, and he's proposing more than what the SMS has proposed and the people. As you said before, the two-tier to Windows Mudaraba. So it is not only Mudaraba, but with 100% reserve, as Asari, Abbas Mirakhor, and Zamir Iqbal, and some others like, also I think from Tunisia, the Nordin Krishan, who has already, he's also active in the gold standard and how can we return to it. I think the most important, if we do agree and we do, come to the point where we agree on the diagnosis of the main causes, the solution will come, I think, easy. If we do not agree on the diagnosis, I think we will still be in a vicious circle, and this will not, take us any more close to good steps that will, at least as bodies just mentioned, in Europe really, and in all over the world. We are engulfed with debt, we are, marked into debt, and how can we lessen the burden of the societies? The people are only struggling for work. For instance, as I said in UK, that the average is more than what they earn in just the paying interest. If we just come to one issue to lessen this burden, I think we have done a great job. Assalamu alaikum.
Well, thank you very much. And unless we have something from Paris, Pierre, if you have any comments or final one.
I think I have forgotten so far to thank Ahmed for his very insightful inquiry into a very hot and contemporary topic. So I thank you very much for this presentation and answers.
Okay, thank you. Then I will also thank Dr. Ahmed Bloofi for this interesting topic and presentation. It raised many questions and maybe open doors for theoretical and practical, hopefully research here and there. He opened or shed light onto the important issue about the problem with the monetary system and some alternatives being given. Whether Sharia, of course, not been discussed but been mentioned, and of course there's the SMS issue. Well, thank you again, Dr. Ahmed, and thank you for the friends in Paris and our friends here in Jeddah. We'll meet you and see you again, inshallah, in a month's time. Thank you. Ma as-salama. Bye.